Hello there and welcome to Business Day right here on ET Now. I'm Avan Dabash. Let's take a look as to how the markets shut shop this Monday before we take you through the top headlines. Well, it turned out to be a fairly choppy session for the equity markets, but by the end of the day, it was exceedingly flat. All of your rate sensitives surged ahead of the monetary policy tomorrow, and the Nifty was higher by just marginally higher at 6,074. For the Sensex, though, in the red at 20,103. Lots of big stories, including big earnings for today. We keep you up to speed with that and lots more after the headlines. All eyes on RBI Governor D. Subbarao, who will unveil the third quarter monetary policy review tomorrow. The street is betting on a 25 basis points rate cut, the first rate cut since April last year. Markets trade flat ahead of the crucial monetary policy review tomorrow. Rate-sensitive sectors like auto and real estate make gains. Tata Motors, Hero Moto and DLF are among the top gainers. The Jet Etihad deal is likely to take off soon. Top officials of the Abu Dhabi-based carrier will meet the Commerce Minister Anand Sharma to discuss regulatory issues. The transfer of jet promoter's stake to an Indian company ahead of the deal may come under discussion. Axis Bank will raise around 6,000 crores via placing shares with institutions this week. Sources tell ET Now that the QIP issue may result in an equity dilution of over 10%. JP Infotech seeks a SEBI probe into the stock price crash. Into all of the sudden collapse of the stock price minutes before the company announced the share sale. The JP chairman Manoj Gaur tells ET Now that there are big problems associated with the offer for sale route. Those were the top headlines, but let's get you all the latest from the macro point of view. You've got all eyes which are set on the quarterly review of the monetary policy by the Reserve Bank of India tomorrow. 85% of the market participants expect a 25 basis points rate cut, while a majority expect the CRR to remain untouched. Simran Gill now joins in with the expectations. Simran.
Well, according to an ET Now poll, majority have already factored in a 25 basis points cut in the repo rate. And this comes in the backdrop of Governor Subbarao indicating in his last policy that Q4 would see easing of interest rates. So certainly most are hoping that he will stick to his promise this time around. But as far as the CRR is concerned, while most bankers have requested for some amount of easing on that front, keeping in mind that tight liquidity is in the system right now, but majority in the market are not expecting any kind of easing on the CRR front, mainly because they are expecting that RBI will continue to use OMOs as a preferred route to tackle the deficit in the system. And of course, lately we have been hearing Governor Subbarao say that inflation is still very sticky, but most are expecting that by March it will be closer to 7% range. That is RBI's projection, and most expect the full year GDP to be about 5.7%. And of course, with the hope that interest rates are coming down, majority also expect that the bond yields will also ease and will be at a range of 7.75%. But one thing that is of major concern is the widening gap between the deposit and credit growth. That's nearly more than 300 basis points at the moment. So certainly most are of this opinion that because of this widening gap, we could see some amount of delay happening when it comes to cutting off lending rates going forward. So certainly all in all, these are the overall expectations from the market. But whether he does more than 25 basis tomorrow, that will come as a pleasant surprise. But if he does no action, well, that will come as a huge disappointment.
Okay, and in fact, you have the bankers who are demanding their demands, in fact, from Tuesday's credit policy is very clear. Everyone wants a cut in the repo rate, but not many are hopeful of it being a significant one. On the CRR front, some are hopeful for a big relief. Let's hear out some of the prominent bankers.
From now up to the financial year 2014, so that's the next 15 months, we should see about 100 basis point cut in the interest rates. The question is whether one starts in January with a 25 or a 50 basis points. I think, the start would be made with a 25 basis points and then followed up, as I said, over the next 12 and 15 months.
Personally, in my view, I don't think it will be a significant cut, but I think there will be a 0.25% cut in rates in January. And RBI will watch again for the next couple of months, everything else remaining the same. My belief is that in March, RBI will probably cut rates again by a 0.25%.
And hopefully some adjustment in CRR as well. OMOs are helping, but I think CRR creates a certain permanence to it. So maybe at least a 0.25% adjustment is here or is done.
It's a lottery, you know. You can press any button you want because nobody comes back and tells you you are wrong. The chorus coming out is 50 basis points on the repo rate cut.
Our wish list is there. There should be some cut in policy rate. There should be some cut on the CRR.
Okay, so all eyes on the Reserve Bank of India tomorrow. We'll have to wait and watch whether they do oblige with a rate cut or not. To the equity markets, exceedingly subdued on the day before the credit policy, with the Nifty just about managing to eke out again. For the broader markets, it was comparatively better, but not by a significant margin, so marginally in the green. Sectoral movers, well, on the downside, it was oil and gas, clearly, which was a big downer. Consumer durables shaved off quite a bit. On the upside, though, as pointed out, was the rate sensitives, which held up, so auto and real estate. Big losers included Reliance Infra after a very bad set of numbers, Jayaprakash Associates, ONGC and Reliance Industries, those two monoliths from the oil and gas space, sulked in trade. Some of the big results that came out today, Bank of India up first. You had the numbers which were largely in line with estimates on the net interest income front. Profits at 803 crores, net interest income at 2,308 crores. Asset quality fairly stable, but the stock ended lower in the session. JSW Steel put out a good set of numbers. The profits were higher by 18.5% at 137 crore rupees. The top line growth came in at 8,274 crores. There was a forex loss of 267 crores and the margins came in at 15.8%. Reliance Infrastructure, 728 crore rupees, so the bottom line did come higher by 78.4%. The net sales, though, were a bit of a disappointment, 5,293 crore rupees, with the margins coming in at 14.6%. Apart from that, Adani Power put out its numbers and the losses widened this time around on account of the high coal prices. 619 crores versus 358 crores in terms of a loss last year around. Net sales came in at 1,883 crores and the margins also were down by something like 500 basis points on a year-on-year basis. There was a forex loss of 267 crores. Adani Ports, though, a great set of numbers and the stock price also reflected that momentum. So the profits were higher by 12.24% at 361 crores and the net sales higher by 52%. EBITDA margins robust at 75% versus 69%. Puravankara Projects from real estate also put out a decent set of numbers and it was received well by the street. 64 crores versus 32 crores in terms of the profits. You had the net sales which came in higher by 60% to 311 crore rupees. Some earnings rub-off that we witnessed yesterday, BEL put out its numbers. In fact, you had the Q3 profits coming in at 198 crores, that is on Friday. The Q3 sales coming in at 1,440 crore rupees this time around. And the stock price did fairly well. Apart from that, education stocks were on fire today. The likes of an Everon Education, an Educomp, Treehouse, all of those counters spurted up very smartly today. Persistent Systems, though, the operating results were below expectations. The top line growth was close to 1.9% to 330 crore rupees and the revenues were higher by 1.2% on a dollar basis. Apart from that, you had MCXSX, which will start its equity derivatives trading from the 11th of February. On the back of that news, the counters soared in the session. Some of the other gainers, DLF, Tata Motors, Axis Bank and Hero MotoCorp. On that note, let's hear out some expert opinion on the market, starting off with Vikas Khemani.
I definitely think that, probably before, in and around budget or before March, you will see market getting into a new high. And I think lots of foreign investors who've been waiting to see, a sort of way forward in the budget would probably again come in and invest money.
RBI policy coming in tomorrow. You have the budget declaration. Today there are some indications that GST could become reality in the next financial year in one of the newspapers. So a lot of those things could become positive. The valuations still do not look expensive at all. So I think that is the most important part in the entire picture. The earning downgrade cycle seems to have bottomed out. Whatever earnings we have seen this quarter so far seem to indicate that we are not really falling any further and we could start seeing some upgrades hopefully sometime during the course of this calendar year later in the year.
Okay, how did the F&O activity pan out for today? Let's get in Navneet Saluja, who joins in with a synopsis. Navneet, hi.
Hi Avan, it was quite a volatile session ahead of the monetary policy. If you look at the Nifty January futures, they closed at about 60.78 with about 4 points premium to the spot Nifty, and they added about 8 lakh shares in open interest in today's trading session. Well, the options data, if you look at that, the Nifty PCR remains intact at about 1.12, and the most active strikes during the day were 6100 call strike followed by 6000 put, and that's the range the Nifty traded today. And if you look at open interest addition, 6100 call added 7.5 lakh shares. 6300 call in fact was quite active in today's trading session, adding 2.5 lakh shares, whereas on the put side you saw open interest being added at 6000 and 6100 put strikes. And talking about the stock futures, well, it was a couple of auto counters which were active in today's trading session. So Tata Motors and Hero MotoCorp, they witnessed fresh long positions. You also had private banks which did well today. Axis Bank and ICICI Bank were up in today's trading session. You also had HCL Technologies and Kane India which were up. So long positions were seen on the futures side, whereas on the short side you had Reliance Industries and ONGC which were down. And from the mid-cap space, you had Adani Power and Opto Circuits which were down, so short positions being built up there. And Adani Ports and Biocon did well. Both these counters were up. Long positions were seen on the futures side. Well, if you look at the participation, the turnover was quite muted. We did only about 1.2 lakh crore of turnover on NSE by the end of the day.
Thanks very much, Navneet, for giving us those details. We're straight to the aviation space, and even as the markets await details of the Jet Etihad deal to be materialized, Commerce Minister Anand Sharma is expected to meet the Etihad management on the 31st of January. The transfer of Jet promoter's stake to an Indian company ahead of the deal is likely to top the agenda of that meeting. The stock price, which held up very smartly, petered off by the day's close. Let's get in Nithya Balakrishnan, who now joins in with all of those details from Agra. Nithya, what are you picking up on the deal?
Undoubtedly, it's a deal that will change the entire aviation landscape here in India, and also the first of its kind to materialize after the government threw open the doors of FDI in the aviation space. Now, we're given to understand that the management of Etihad will be meeting with the Commerce Minister on Thursday, clearly indicating that what they seek is some regulatory clarity on the entire framework and structure of this deal before going ahead and signing the dotted line. Now, what we are given to understand is close to 24% stake for anywhere between $300 to $350 million is what is being considered by Etihad into Jet. But given the unusual shareholding pattern in Jet Airways, the fact that promoter Naresh Goyal actually owns 80% of the stake through an overseas account, namely Tailwinds in the Isle of Man, they want to understand whether this shareholding has to be changed before Etihad decides to buy in to a Jet Airways stake. Clearly, that is what is going to be discussed on Thursday's meeting, outlining the contours of this so that when Etihad does buy in, it does not exceed the actual cap of 49% of FDI in civil aviation. Categorically, the Commerce Minister indicating that it will be a very crucial meeting, not just for Jet Airways, but for the Abu Dhabi aviation giant Etihad as well.
It has resonated very positively with our global partners and investors. And I could see that there is a change of perception. And the top CEOs of the world who met with me gave a very clear indication they are looking forward to seriously engage. Well, I cannot speak for them, but they are meeting me on 31st.
Now, the Axis Bank QIP is likely to be launched this week, and the bank is looking to raise 6,000 crore rupees via the QIP route. The price band is expected to be in the range of 1345 to 1395. Poonam Sani has got all the details on the same. Let's take it straight across to her. She joins in from our Mumbai newsroom. Poonam.
Well, Avan, it's very true that Axis Bank is going to launch its QIP. It can be any time in the next 2 days as early. There's also a possibility that the QIP would be launched as early as today evening. It's an issue size of approximately 6,000 crore rupees, and the total number of shares offered would be 4.52 crore shares, which is nearly a dilution of nearly 10.5% on the pre-issue dilution of the total shareholding. Also, what we are hearing from the sources is that the price band is likely at 1345 to nearly 1395 levels. That's the price band that we are hearing, and the bankers to the issue is Citigroup as well as JP Morgan. There's also a likelihood of allotment of preference shares on a proportionate basis to LIC, as LIC has close to 9% stake in Axis Bank. And what we're hearing is that there is a tentative, in terms of the tentative demand, that the issue is likely to be oversubscribed as well. So do watch out for this news.
Well, and it's likely to come out this week itself. Thanks very much, Poonam, for bringing us those details. Moving on then, infrastructure major JP Infratech has written to the SEBI seeking an investigation into the sudden collapse just minutes before the OFS issue. In an exclusive interview with ETNA's Nithya Balakrishnan, the executive chairman of the JP Group, Manoj Gaur, says that there are big fallacies on the structure of share sales via the OFS route.
I can definitely see that there is a big fallacy. The way the structure is made for OFS, the script, the share is available for, I will say, people with malicious intentions to beat the share, and we saw almost 10% drop, even only in 1.5 hours on the day it was to be launched. It was very clear that it was not a normal market operation. Some people have done it. Why they have done it, we have to investigate. We are requesting SEBI to investigate, because when we called off, next day the script was top gainer. So there is something which SEBI has to take note of it. Our humble request would be. And as far as when we will do it, well, we hope to do it and meet the compliance norms.
Okay, moving on then to the oil and gas space. And 12 years after all government clearances, the Defence Ministry has barred exploration and production at the KG-D6 basin, calling it a no-go area. The stock of Reliance Industries shed over 1% in trade today. Ajay Sharma now joins in with more details on how exactly this impacts the company and what the way forward is. Ajay.
Well, that's correct. Reliance Industries was in fair amount of pressure today since morning after news report came in that saying that KG-D6 block actually given a no-go order by the Ministry of Defence. What this essentially means is it spooked the traders on the street that this is a fresh order, and the work, exploratory work and development activities in KG-D6 which come to a halt now. However, we actually spoke to topmost officials in the oil ministry as well as the company and inquired. The actual case was that this is a several months back issue, and not only Reliance Industries but several other companies like KN, ONGC, several fields are actually coming in no-go area, and this the old issue which is being taken up by oil ministry now. We understand that within a week's time this issue is expected to be discussed after intervention from Prime Minister's office, and the cabinet could actually clarify, and sources say that 32 blocks could actually be given unconditional clearance. So actually a positive development is expected very shortly. Reliance Industries top sources said that till now they have not received any order, formal communication till now, and the work is going on as usual. Analysts say that this news report actually dampened the sentiment on the street. However, the stock is expected to recover as in the next coming days the news development actually comes out in the market and the sentiment improves.
Thanks very much, Ajay, for putting all of those details into perspective. So the PMO is keen on expediting approvals for the oil blocks, and the oil ministry as well as the PMO will be in talks for faster approvals. But of course, Reliance Industries is also planning to raise around $2 billion from the Asian markets by issuing bonds to foreign investors. Let's take it straight to Vijay Ganeshan Iyer, who now joins in with the details of this latest development. Vijay.
Yes, Reliance Industries a perpetual bond opened in the Asian markets earlier today, and Reliance Industries plans to raise close to $1.5 to $2 billion with a 6% yield. The timing is significant because Reliance wants to tap and keep a lot of cash for its expansion in petrochem and refinery business. At the same time, we all know there's also going to be a 4G or 4A that Reliance is planning later this year, so a lot of capex involved. But Reliance, as always known, is trying to time the market when the interest regime is at an all-time low, and is offering this yield for foreign investors at 6%, which would be attractive when compared to the yield, which is also an all-time low. So it's going to be a win-win situation. So this bond will be open for a week. So it will be interesting to see finally how much they manage to tap from the foreign investors in a week's time via this bond.
Thanks very much, Vijay, for giving us all of those details. But as pointed out, the stock price of Reliance Industries was down and out today. The telecom space, in just 4 days after the Bombay High Court gave a relief to Idea Cellular, putting the telecom department's demand for one-time fee on hold, Bharti Airtel today also got a similar relief. Let's get in Gauri Dwivedi, who now joins in with the latest details. Gauri, interim relief has been given, but how long before there could be some more clarity on this issue?
Well, interim relief, as you rightly pointed out, is now till the 1st of March. And in fact, Bombay High Court has also directed the Telecom Department not to use any coercive action against these companies. Remember, tomorrow, that is 29th of January, is the last day for paying the one-time fee, which telecom companies feel is absolutely illegal and violates license conditions. As far as this entire issue is concerned, well, who knows? We might be staring at a long-drawn legal process, a legal battle. A case in point being the 3G roaming row. It actually started on 24th of December 2011, and we are actually in January 2013. So it's been a fairly long time, and still there is no clarity on whether or not those which way that roaming issue is really likely to end. So you never know, it might go the similar way as far as the one-time fee is concerned. Not to forget, there are huge payouts that all these companies are staring at, which is why, of course, they are taking all possible legal action.
Okay, a long-drawn legal affair. Thanks very much, Gauri, for giving us all of those details. Moving on then, HUL's decision to hike royalty payments to its parent company Unilever has sparked the royalty debate in the FMCG sector. While ITC chief YC Deveshwar believes that royalty hikes are unjustified, Harish Manwani of HUL defends the company's decision, saying it was definitely a beneficiary in the long term. Krishna Kumar reports.
Hindustan Unilever's decision to more than double royalty payments to its parent has attracted harsh criticism from one and all. And as the stock takes a tonking, the company's non-executive chairman and Unilever's COO, Harish Manwani, is in damage control mode.
At the end of the day, the criteria that the board had to use was, is the basis of the cost allocation fair? And number two, does it benefit all the shareholders of Hindustan Unilever? The board deliberated, as you can imagine they will, deeply and engaged with the business, and more importantly with the proposal, and absolutely convinced themselves that this is indeed ticking both the boxes.
Manwani says the turnaround in the performance of India's top consumer goods company in the last 2 years has been driven by its Anglo-Dutch parent's scale and innovation pipeline.
Part of that business turnaround has also been because we have stepped up the way, the speed and the quality of our innovations, and equally the way we are able to leverage the bigger scale of Unilever and adapt it for our Indian consumers and our Indian market.
However, the top boss of HUL's main competitor in India, ITC's chairman YC Deveshwar, is clear that such hefty payouts cannot be justified.
I'm sensitive about this because our country will not hold its head high unless we have our own intellectual property. We have our own R&D and we have our own brands. Some of the companies, 30% of their profit was going as royalty. So it is not only the small shareholder.
The ruckus over royalty has certainly shaken investor confidence. HUL, in its defense, says it's a move that will turn out to be beneficial in the long term. Dalal Street is clearly not quite convinced just yet. Krishna Kumar, ET Now, Mumbai.
Okay, that's about all the time we have right here on Business Day. Thanks so much for watching. Keep it with ET Now.